For that, let's take in some insight from Anurag Singh from Ansid Capital. He joins in on the show right now to talk about the global setup right now. Anurag, hi, good morning. Guess while we're awaiting some more details on what sort of tariff India will incur from the US, but in the meantime, I can see very strong US retail sales, low weekly jobless claims, and that's all signaling a very strong US economy. What do you think the markets are going to factor in and how the dollar index is going to pan out from here, Anurag?
Aisha, morning. First of all, I already am missing Nikunj, by the way, right? So I think it's almost synonymous. And, not to mention, Aisha, you and Nikunj have been the face of the channel for quite a while. So at least good to see you on the channel still. So, but good luck to Nikunj, for all the future endeavors.
Anurag,
Now,
I'm not going anywhere. You'll have
good,
me
good, good.
here.
Thank you. Okay, so Aisha, I think before I come to the dollar point, I think the economy is doing very well. The U.S. economy, the sentiment, the business outlook, the optimism, it is unprecedented. And I just I can only tell you that there are a couple of publications that you to avoid. Very prominent newspaper. One is a European based, I won't name because some of them talk to me as well. But and then some, of course, from US. And if you read them, it feels like US is going downhill and it's going to be down in dumps. The reverse is actually the truth. US is doing very well. Business optimism is high, consumer optimism is high, employment is at the peak, and it looks like that will continue to grow. The taxes, the bill already has lower taxes, and now the lower regulations and all of that good stuff will follow right from the government side. So I think optimism is great, and on the horizon, I think now the Federal Reserve also is more positive and open to cut the rate. So this puts a very good base for the markets and economy in general, right? So that's where that's where I stand on this. And I think on the dollar, my view has been, and we've discussed that in the past, that that was not the intent. To weaken the dollar from 108 to maybe 104, 102 was fine, but this is a bit of a over sell, and I think the positions were mostly done by Chinese and Japanese. I think some of that should reverse and dollar should get down back to 100, 102. But having said this, there is a contra view as well. So some of the one section of the market believes that it might go even further down from here. We don't know what will turn out to be right. My sense is money will still rush back to dollar, and the European fancy that the market, one section of the market has, it will be pretty short-lived. So yeah, that's a quick take on the U.S. economy.
All right, but Anurag, how is the sentiment shaping up for the emerging markets and especially India? Because taking cues from the US market slowly and steadily, they have been inching higher. It's been a record close for the benchmark indices. But do you believe this case can bode well for the emerging markets and maybe perhaps India?
So, Srishti, the challenge with India is this, that it's no longer cheap. It is kind of it tries to drop, but the flow, it's a story of flows. The SIP flows and the overall 50 billion that is being pumped by retail in the markets is not allowing the markets to correct. And we are in a situation where, except that 15% which is held by FIIs, ultimately rest of the market is basically buying, and maybe on the margins promoters are selling. So I don't think India is rising in a hurry. There's nowhere to go. The growth and the earnings are kind of late, high single digits at best, right? So it won't correct, but it won't rush anywhere in a hurry. So there is a bit of a pause, which is fine, right? We had a 20% growth over the last 5 years, even on Nifty, right? And mid cap, small cap jumped pretty, they grew at the rate of 30%. It's okay. We spent a couple of years just consolidating. I think that's the good sense. And I think everybody knows it. It's a great market, but it is all priced in, right? So FIs are also not in a rush to jump in as of now. Of course, there might be sectoral picks, but that's where it is. But broadly, the market stands reasonably very well valued. There are no bargains, Srishti. That's my take.
Okay, and Anurag, once again, focusing purely on the US economy in terms of the banking
Yeah.
earnings that we've seen. Last couple of days, major banks from the US have reported their earnings, and they've either been largely in line or a beat versus expectations. Compared to that, the financials or the banking front in India for quarter 1 is expected to be muted on the back of weak credit growth. Give us some sense on the kind of resurgence that we've seen in banking numbers on Wall Street.
So, look, out here, bank regulation is one of the very prominent things that the administration is doing. If I take you back to 2008, and of course, Obama was sworn in that time. The next 7, 8 years, the Elizabeth Warrens of the world, they got into the whole Dodd-Frank Act and plugged in all kinds of regulations. Ever since, the banks have been throttled, especially the big ones, the JPs and Wells Fargo's and the Citis and Bank of America's and Goldman Sachs and Morgan Stanley. Now all of that is unwinding, and you saw that with restrictions taken away on Wells Fargo. You saw, Goldman Sachs CEO talking about business optimism coming back. Next 3, 4 years, even the small banks are being unshackled of the regulatory pressures. So I think next 7, 8 years, very good for banking within US, largely because of the regulatory cholesterol being taken out. That's the US story, and that's why you see the banks for the last 1 year have been doing pretty well. When this administration was they won the elections. Indian banks, Snehi, I think the situation is very different. Indian banks have had a very stupendous credit growth. Retail credit to GDP in India was like 20% of 20% of GDP, right? Now it stands at like 42%, right? So that's like doubling of the retail credit in just about 5, 6 years. Now I think it needs to wait because the income of people is not rising at that pace. And so if people have already leveraged themselves, where is the space for borrowing more? And that's why you see the credit growth is now tapering down. And as long as that stays at 12%, which is nominal rate of the economy, I think then things will be more stable. But you can't expect abnormal growth from here unless economy picks up or earnings pick up or the job creation picks up. So that's the story of Indian banking. We need to be, they're good buy. They're not too expensive. But we also need to be cautious because banking works in a cycle. And after an up cycle, there comes, after 3, 4, 5 years of good cycle, there is an absorption period in banking. We should not forget that.
So
I
Anurag,
hope I
given
got the game right. Sorry, Snehi?
Yes, absolutely.
Thank you. Good. Yeah. Please.
Right. No, Anurag, I was wondering, given your view on India valuations right now, the fact that we've just about begun the earnings season and warming up there, wanted to understand what's the portfolio strategy? Do nothing right now, or are there any sectors or stocks that you're keeping on your radar? Should the earnings be this way or that, then take a call perhaps to nibble in?
So Aisha, I think everybody's talking about it, right? I think now, earlier, I think about a year back, people were talking in low voice that, okay, keep your expectations a little moderate. But now I think good names, prominent names, even from the mutual fund industry are saying that, look, guys, I think we are very fairly valued. Don't expect more than 7, 8, 10%, at least for a couple of years. So moderate it down. There are no bargains. Really, there are no bargains in Indian market, right? So I think if you're invested, stay invested. That's fine. I think you got to average out. If you got a good 20% year, then every year can't be 20%. So that's a fair call. But don't jump in with everything. Don't sell your family silver and jump into the markets. I think that's the only call. So keep the money flowing, but there are no bargains. As long as the retail is convinced and keeps pumping SIPs, I don't know, it's hard to figure out opportunities. But that said, I'll still tell you a couple of areas. Look, I think healthcare is one area which is, and outside of pharma, I'm saying hospitals, diagnostic, other stuff, they will continue to grow at a pace which is faster than the pace of the economy. And, they have good sizable inflation as well. So that will do well. Aside of that, IT got to be cautious a little while, a little bit, because the multiples might drop. They are not growing as much, so you might have to watch US market for that. Banks are fine. We have always liked the banks. The at least the top 2, 3 private sector banks I've always liked. I'm not so sure about public sector banks. Insurance, I'm always cautious. Life insurance in India has hit the peak. I don't know, stocks don't do anything despite the noise. And what brokerage capital markets overheated again. I think we have 18 crore demat accounts. It's not going to grow to the sky. I think it's quite a bit. So that is a bit overheated place as well. So yeah, overall, be cautious, keep the money on the sidelines. It's the be in bonds a bit. 20-25% should be in the bonds as well right now, especially this time. I've always been a big votary of balancing your SIP. Just blindly putting SIPs is going to make the market expensive. So customers need to weigh in. This is the time to really hold in your horses and be, in safe large caps. Because next couple of years, there's no excitement really. And stay away from defense, I think. I don't think those valuations are justified, despite the story. Yeah. And stay away from all the IPOs, by the way. So basically, that's the story, for now.
Okay. Anurag being as bearish as he ever has been and now
I'm
on
always
record.
yeah.
Cautious rather,
Always.
not
Yeah.
bearish. But great chatting with you, Anurag. Thanks as always for your time.